What's up? What's up? What's up, my mind your money business folks? It's me yet again with another video on today's stock market. So it looks like the stock market is bouncing back as the Dow snaps its longest losing streak in 50 years. So it looks like the stock market is rebounding after the Fed fueled route of dropping interest rates 25 basis points. At least that's what the headlines are saying, right? If that was the case, then why the pullback on yesterday? I don't know. I don't control the market. I just invest in it. So I hope you guys are having a blessed day. And I hope that you're in the market and not trying to time the market, because there is no specific time that you should be investing in the market. That's why I dollar cost average into the market every month. I set aside a certain amount of money within my budget to invest into the stock market. And so far this year, it has worked out for me. Even though there have been many days where the stock market has been going down, the titles today are saying how the Dow Jones has snapped its longest losing streak in 50 years. But overall, I have made money this year. Every year that I've invested into the stock market, actually. So it says here, U.S. stocks rebounded on Thursday from the previous day's sell-off that was fueled by a hawkish outlook from the Federal Reserve on its path for interest rates. So again, the Federal Reserve reduced interest rates by 25 basis points, but the chair, Jerome Powell, stated there will be less cuts next year. So that means interest rates are going to be higher for a little longer in 2025. That's not a good thing, people. That's not a good thing. It says here the Dow Jones Industrial Average, the S&P 500, and the tech-heavy NASDAQ Composite were all up 0.5%. No, so there are gains today, but it's not making up for the losses over the week, and especially yesterday. Yesterday, Dow, S&P 500, NASDAQ, the Russell 2000 was down 2 and 3%. So today it's gained back 0.5%. The 10-year Treasury yield continued to trek higher as on Thursday, rising roughly 9 points to hit 4.58% for the first time since May. Markets are bouncing back after a harsh reaction the day before, which was prompted by the Fed scaling back the number of rate cuts it expects next year. I just said that. And Jerome Powell saying Wednesday's decision, cutting rates by a quarter point, was a closer call. Now here's the thing. Well, no, I'm not going to say that. It is what it is. I was going to say something about the interest rate cut, but there's no need. There's no need. Okay, markets interpreted the Fed's move as a hawkish cut and reacted accordingly, sending the S&P 500 and NASDAQ to their worst days since the summer. Meanwhile, the blue chip Dow is in the midst of its longest losing streak in 50 years and looking to break out of that funk on Thursday. The Dow is still up over 12% this year. On the economic front, the third estimate for third quarter U.S. GDP, that's gross domestic product, showed the economy grew at an annualized rate of 3.1%, above the previous reading of 2.8%. Other data out Thursday morning showed 220,000 weekly unemployment claims were filed in the week ending December 14th, a decrease from the 242,000 seen the week prior. That's just how it is, people. That's just how it is. Yeah, and that's pretty much it. Short and sweet. Things are are up 0.5% today across the board, snapping the longest losing streak, in 50 years within the stock market. Things are changing, people. There's so much information out there. People, in my opinion, have more control over their lives than ever. People are more educated than ever. There's more information out there in books, and counseling forums, and the internet, if it's used correctly, to where people can rely more on themselves than, say, that of the government, So I think things are going to become a little tighter. However, just because it becomes tighter doesn't mean that it's going to get worse. It will only get worse for people who do not create a plan. You have to create a plan, people. You cannot continue to just live life just to be living it and not understand the situations that we're in, right? You have to plan for this life that we're living in order to have a solid foundation. And when bad things happen, or things happen, you're prepared. Like losing your job, you're prepared. Having an unexpected expense come up, you're prepared. Retiring and not having to worry about working again, you're prepared. There's an end to everyone's life. When you transition out of this world, you leave something behind for the family members that you leave behind, because you're prepared. Like Dave Ramsey points out, especially if you're young, well, if you have a family, kids, wife and family that you're taking care of, make sure you have the adequate amount of life insurance, so that those you leave behind, wife and kids, a husband and kids, there's enough to take care of them. Invest into the stock market, dollar cost average into the stock market, make a better rate of return on your investments than you will by just leaving your money in the bank. You have to live smarter, people. That's just the way this thing works. It's just the way this thing works. Either you play the game, learn how to play the game, or you continue to get played, and you be one of these people that I talk about in some of my stories on YouTube, having to work at 70, having no insurances, having no retirement. To me, you learn from those situations. You're supposed to learn from those situations. That's why they're out there for me to read and for us to read and to learn from, on what not to do. Or you too will end up in similar situations. And there are so many people that are in so many negative situations because they have failed to plan. When you don't put a plan in place, you're planning to fail. You do. Every company has plans. That's why they lay people off. Like when the things aren't going, then they come up with a plan like, okay, we have to chop this many people off. We can afford to lose this branch, or we're paying too much money. They figure out ways to keep more profits in the company, instead of letting the company go under by keeping everyone employed. No, they cut their losses. And we too have to do the same. There are some people that you should not hang around. You need to stop hanging around. You need to cut them off. So yeah, so currently the market is going to be open for about another 51 minutes, right? And currently Tesla's down about 0.8%, SMCI is down 2%, AMD is down almost 2%, Broadcom's down a little over 1%, Palantir is up about 4.3%, S&P 500 is up 0.3%, like the article said. That's how much the market has rebounded, almost 0.5%, right? But currently, S&P 500 is up 0.3%. My information technology ETF is up about 0.26%. Microsoft is up 0.23%. Apple 0.6%. Nvidia is up 1.7%. So yeah, that's it. Disclaimer, I need to put this out there. I'm not a financial advisor, nor am I pretending to be one. I'm just someone on YouTube giving his opinion. So just be mindful of that. Any and all information on my channel and in my videos are for entertainment purposes only, right? So please consult with a financial advisor before you invest any money. So yeah, I hate to end this video, but I have to go. All right, you guys take care. Peace.